We are on the threshold of an explosion in innovation, and crypto is symptomatic of it. The seeds for what is about to happen were planted during the 20 years that ended with the tech and telecom bubble. Those seeds have been gestating for 20 to 25 years, sometimes 30 years, and are now beginning to blossom. And that's not even the right word. They are exploding into existence. So we think there are 5 major platforms, 14 different technologies that are all getting ready to move into the sweet spot of their S curves. And there are going to be convergences between and among these technologies. So you're going to have one S curve feeding another, and creating explosive energy and explosive growth. And I think in the crypto space, we're going to see blockchain technology and artificial intelligence converge and cause explosive reactions. So it's pretty exciting. Just to get back to investing in the future, when I was trying to explain to someone what I wanted to do before starting ARK, and who's not in our business, he said to me, "Oh, you mean that in the future of investing is investing in the future?" And I said, "You got it." Well, now, when I started in the business, that's the only way people thought about investing. And then we went through the tech and telecom bust, and then the 08-09 meltdown, and we ended up with huge risk aversion in the markets and a tendency to invest very much like the broad-based indices out there. In other words, not adding much more value than the indices themselves. And the indices are where they are because of what has happened historically. The largest companies, the most heavily weighted companies in these indices are there because of their past success. But if we're right, and all of this disruptive innovation is about to explode, well, they are in harm's way. Was drawn by Brett Winton, or developed by Brett Winton, who's our director of research. And he was working with academic literature to try and understand what would be the productivity or the impact on productivity of the combination of these platforms. And what he's depicting here is the productivity uplift is going to be unlike anything we've ever seen. We've had multiple platforms evolving at the same time only once before, and that was in the early 1900s: telephone, automobile, and electricity. And that world, that was the technologically enabled innovation of the time, and transformed our world completely. Let me put some numbers on where we are now. In 2019, when we did this chart, we evaluated the market cap around the world associated with truly transformative innovation. That year, it was $7 trillion. So it was less than 10% of the global equity market cap. That's public equity. The next year, last year, that doubled to 14 trillion. And we did have a very good year last year. We believe that in the next 5 to 10 years, that number is going to north of $100 trillion. But what we're not saying when so that's the upside. The downside will be in the broad-based benchmarks, which have been beneficiaries of the traditional world order and are now going to be disrupted and disintermediated. I think the pace of innovation and the convergence between and among these platforms, most investors have never seen exponential growth. Well, they recall seeing it once. It was during the tech and telecom bubble, and that ended badly. And that's why there's been this allergic reaction to innovation and high valuations. Most investors have a 1-year time horizon, maybe 18 months. we have a 5-year investment time horizon. The early years of exponential growth, when we're at low numbers in terms of the base, the numbers don't look that much different from linear growth. But when you go out 5 years, the difference between exponential, so revenue growth rates in the 25 to 50% range per year, and let's say GDP growth, which might be 5% at best, night and day. And I think what gives us the differentiation is our starting point. We start from the top down, trying to size markets, and we center our research on something called Wright's Law. Wright's Law is a relative of Moore's Law. Moore's Law is a function of time. Wright's Law is a function of units. And actually, Wright's Law has worked better in the semiconductor industry than Moore's Law itself during the last few years. And so that's how we get to numbers like the electric vehicle space, 2.2 million last year, but the costs are dropping to such an extent now that we think that number is going to 40 million, almost half of the global cars sold in 5 years, actually more like 4 years now. No one has that kind of accelerated growth in their models. They've never seen it before, so they're not modeling it in the future. But Wright's Law is a very good guide. Well, again, my aha moment was after Chris had really written the paper, Could Bitcoin Serve the Role of Money? We're just working from a very basic level. And we were talking about a $6 billion market cap at the time, or network value, as we were calling it. And we had Art Laffer take a look at this paper. And he looked at it and helped us. We wanted it to be absolutely correct from an economic point of view. He looked at it and he looked up and he said, wow. He said, this is what I've been looking for all my life. This is a rules-based monetary policy, a global rules-based monetary policy. And I ended up saying, oh, okay, well, if that's true, how big could this become? And he said, well, how big is the US monetary base? And at that time, it was $4.5 trillion. Now it's $8 trillion. Because he was dimensioning it as though it would be the reserve currency, a reserve currency out there. So a global rules-based monetary system, hugely important for humanity, I believe. And I share Art's view. I was educated by him, so that's not surprising. But and then. I think the idea, again, Chris wrote the book, we're dealing here with a new asset class also for investors, unlike anything we've seen before. And, unlocking huge productivity and creating inclusion like we've never seen before globally. So I think, and decentralized finance is just mushrooming as we see. So, it's going viral.